David Lincoln Productions.
Information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.
So, welcome back to the Short Ball Show Live. My name's Dave. Anyways, I'm getting a regular schedule on Twitch coming up. I have the moire on my shirt. Look at that. That's craziness going on there. Wacky. I will be starting to be regularly on Twitch. I will release a schedule next week of when I'll regularly be there so we can meet up. That will be fun. I wanted to say to everybody, I hope you're having an okay trading week. I show the quote-unquote sample position here, and I focus on that some shows, but I'm really here for you guys, and, if you have stuff that you're looking at and we could look at it together, that's awesome. I really like the fact on Twitch that you can interact. It's really upsetting to me that my live stream on YouTube isn't working lately and I can't interact with people, because that's kind of my favorite part. Yeah, it's nice to, it's nice if the sample position does well and stuff, but that's just one person's position. I'd rather talk about ideas for everybody. So in that vein, let's look at VXX, because I found a nice put spread that I did a little bit in this morning, and what it is just the it's the December 23-25 put spread in VXX. This gives you a decent amount of time. Basically, you just need VXX below 23 by the end of December, which is in how many days? 84 days. So basically, you're just betting that whatever forces exist take this just a little bit lower in the next 84 days, one way or another. Look, you can see the green screen behind me. It's like peeking through. Wow, this is like a debacle of issues here. Let's see if we can fix the green screen. Chroma key, similarity. There we go. Bye-bye green screen. All right, but you still have the moire on my shirt, but we'll have to live with that for now. Yeah, so anyway, I'm feeling pretty embarrassed because I was on that show last Friday and we had to predict where the VIX would be this Friday, and I said 12.08, and I'm like way wrong. I'm like so wrong. It's incredible. So hopefully they have me back on the show. I'm feeling like a dum-dum. But, things could have happened that way. I was listening to Andrew G talk on on an Options Insider program yesterday, talking about how the realized volatility of the SPX has been really low lately. The S&Ps haven't been moving. Not that much has been moving at all. He was talking about the actual movement around of the SPX was around 7% for like a few sessions in a row. But the VIX is still up. So there's something going on that maybe has not actually displayed itself yet. But, the VIX is a lot higher than the actual stuff is moving around. So that's a situation which can't continue forever. Either stuff has to start moving around, or the VIX has to go down. They can't just stay at odds with each other for too long. And I guess the indication that Andrew was saying is that there's something on the horizon, something's going to happen coming up. And I would say either that or nothing happens, and we will see a down move in the VIX again. However, right now we haven't seen that. We've seen a little fade in the market so far today. If we look, let's take a look at the futures overnight last night and see where we came from here. And it's been a fade for a while. Here we go. So this is what's happened today so far. You know, kind of a little drop off in the futures here. Our old friend ACB is not looking great. Carvana finally cracked. You know, we've been following this for a while. It's had some great up moves. It's finally back down a little bit. I was watching some. You guys know about Carvana? They have this thing called it's like a car vending machine. I think they have 5 or 6 of them around the United States now, but you go to the dealership and they give you this like coin. It's this whole gimmicky thing. They give you this coin that you put in a machine, and then your car comes out of this huge vending machine that's several stories high and comes to you. And I was watching some, YouTube videos about Carvana, people that have bought cars from Carvana, and these people are it seems they're so picky. They're like, oh, well, it had a little nick in it, and I called the dealer, and they wouldn't, I mean, people are very, very, very picky about their cars. But anyways, most of the reviews from Carvana have been good, although this vending machine stuff is it's very gimmicky. I guess it gets people to talk about the place, and that's kind of the point of the whole thing. But people were saying how this guy was giving an example of he bought this car. This is the vending machine thing here. It brings a car down from the top, and then it gives a little spin, and then it brings it to you. Here it is right here, like bringing one of the cars that's already, I guess, down on the ground floor towards you. But people have said in general, it's a different experience buying a car online, obviously. And the good news with Carvana is you can get your money back. What happens is that you have to pay for the car, and then they bring it to your house, and you have like a 7-day test drive, and you can't drive 10,000 miles. You can drive, I think, up to like 400 miles. But if you don't like the car, you can send it. They'll come and pick it up, and you get your money back. And several people have tried it, and they did get their money back within like 5 days or whatnot if they didn't want the car. But so it's still up in the air if this business model is going to work. Obviously, they've expanded a lot. The stock has had these huge up moves, and I've unsuccessfully shorted it in the past, but obviously it has faded recently. It got to a high of the mid-80s, and now it's in the 60s. So there's Carvana for you. A tough one for me to figure out and trade. Most stocks are tough for me to figure out and trade. I'm not an excellent person at picking stocks. In fact, I'm terrible at it. But so I don't try very often. So here we have it. Let's go to BYND, because BYND, we've seen a resurgence in the volatility levels, and that kind of makes sense. Seeing it as I looked at it a couple days ago, it was up, I think, $15 in one day. But we're seeing vol levels creep back up, and it can get to a level where it's attractive to sell some of this stuff. If I get out of the way here, and I've pulled up on Thinkorswim, here I'm on trade, all products, and then BYND on Thinkorswim. And you can see the screen here. It shows this is different options months. And then if you look to the far right here, this is there's a percentage number. That's the volatility number. And BYND made that big move. If we look at the chart going back, this was like big one I was focused on for a while. If we look back to August here, you can see the high of 239 and then the move back down. During this period, volatility levels were way up there above 100. And it came in a lot, but with the gap up a couple days ago, and I think that it's like some McDonald's news. Let's pull up. I'm unprepared as far as what the news was in Carvana. So I mean in BYND. So let's take a look at it. Regardless of what the news was, volatility is up, and it might be a time to maybe look to sell some more strangles. So Beyond Meat's latest competitor is McDonald's. I think they hooked up with McDonald's is what it is. Let's take a look here. McDonald's announced plans to test Beyond Meat's plant-based products in Canada. That was the news. So, and if you go to your local supermarket now, you will see Beyond Meat on the shelves. It's a real company. It makes real products. It's got a real high valuation, and it's been staying in this range here pretty well. So, I would think that these options prices are going higher. The highest prices are going to be like right before earnings, right? So that's why we've got the pump in some of these months. Sometimes with these weeklies, you kind of want to dig in a little bit deeper because a lot of times there's like no open interest. So like, for example, this one Nove weeklies, look, there's almost no options trade. So you have a percent volatility number. They're probably going to fade you which means you're going to have difficulty trading it. If we look at these markets here out in 1 November, stuff is pretty wide. 280 bid at 620. What do you want to do? I'll pay 280. I'll sell them at 620. That is a fabulous market. You can kind of test this stuff out and see if you can get anything done mid-market. There's not a lot of liquidity there, though. I would try to stick to the monthly expirations. If on the chart we have here, the ones that are white are monthlies. Probably going to be easier to trade. Look, you can see there's not a lot, but there's some volume in the October options today already. This is a pretty popular one to trade, so there is some liquidity here. Not huge open interest, of course, but there is some liquidity. And if we were looking at strangles, what would we look at? Well, October is a 70 vol, so what does that mean? Let's go out to November. All right, so stock's 151. So what if we queued up? Let's queue up a strangle here. So what if we do up $25? So that would be 175. What if we sell the 175 call, and then we go down like $25? So like the 125 put. Now this is still hard to borrow. So when you look at the options market, you're going to be like, what? How come the put that's $25 lower is so much more expensive than the call that's $25 higher? Well, that all has to do with the hard to borrow nature of things. And yeah, you make a lot more money selling puts than selling calls in this. When you do have a hard to borrow, one of the things they're going to do is they are going to center the stock price lower than it normally would. So in a normal issue, the at the money calls and puts should look somewhat similar, but in this case it's so hard to borrow that they might run the options. Stock right here is 150 bid, 150.85 bid at 151.05. They might center the stock at like 148. What that's going to do is, because when we talk about like a call being a substitute for stock, right? A deep call, we say, a deep call is the same thing as stock. Well, not in the case of a hard to borrow. If somebody was going to give you a deep call or stock and the call was like parity, to the bid, you would rather have the stock because the stock's hard to borrow. Everybody wants the stock. So in that case, puts are valued higher and calls are valued lower. So it makes sense to just center it a little bit lower. So let's just put this trade. Let's just analyze this trade though. So we sold the Nov one. If we sell the Nov's at 175 call and the 125 put, let's go to our analyze tab here. This is showing so if you sell one of these strangles, it's costing you 5,000 in buying power right here, and you're collecting $28 a day. Now, of course, there's some risk in a trade like this, and if you look, I have this set at a 60% move one way or the other. That was from before, just because I want to say, like, what's the worst thing that can happen? And back when I was trading it then, I was thinking, well, the worst thing that can happen is a 60% move. If we reset this to what Thinkorswim normally is, which is just 10% up or down, you can see on the far corner here is basically how much buying power this position of being short one strangle is going to cost you at different prices. So with the price right here, it costs you $5,000. However, if you move any way, since we picked a strangle that's like equidistant from the price of the stock right now, pretty much, either way you move is going to start eating up more buying power because you're getting closer and closer to an option that you're short. So if you wanted to put one of these strangles on, I would consider not the buying power it shows right here. I would consider the buying power that is required for like a 20% up move, say, or a 20% down move. That way, you're not putting yourself in a situation where you are forced to cover because you get a tap on the shoulder from your clearing firm. So maybe even put up or down 30%. Gives you some room to breathe with the strangle. So it's showing up 30%. This position is going to cost you, well, up 30%, you're blown way through the strike, right? The actual strike, you can see me manually adjusting this. So if we adjust this to the actual strike price, the strangle is that we're modeling here. The strike is up 16% from the price the stock is now. Now we can go to our options screen. Funny thing about options, when probabilities are concerned. We can go to our options screen here in BYND, and you'll notice on the top up here where my pointer is, there's this thing called the layout, and I'm always switching the layout like constantly. And I have my custom layouts that I made myself here, and then there's just one that has volume open interest. That's just to tell me what's stuff that's happening. But in this case, we're going to go to delta. And delta is going to tell us the probability that options are giving us that BYND is going to go to that 175 strike or through it by November. And it's showing an 18 delta. That means 18% chance that it gets to 175. So conversely, an 82% chance that it doesn't get to 175. And when we're selling a strangle, we're selling an upside option and a downside option. So we're giving ourselves a little bit more running room, because not only do we have the $2 that we could sell this 175 call for, we also have you can pile on top of that the 14 and change that we're selling the put for. And that gives us a break-even point a lot higher. So you can add the 175 strike we're selling, you can add $2 to that, because that's what we collected in premium here, plus another 14 for a break-even point. So 2 plus 14 would be like 16. So 175 plus 16 would be like around 191. So your break-even's around 191 here. Does that sound reasonable? It sounds reasonable to me. This seems like it's just been bouncing around the the 150s. If we do, let's take a look back at the chart again. And kind of when you're doing when you're putting a strangle on, you can look at volatility numbers, you can look at other stuff, but I would also look at the chart. And I say all the time, I'm not a technical analysis guy, but look at the chart and say, is it reasonable to me that this thing could stay in between what did we say our break-even point is? 191, and then to the downside, 125 minus the premium 16, right? So down here, let's just call it like 100. So here's your break-even. Here's your break-evens. Can it get between here and here? Can it stay between those by November? It certainly can. And it seems reasonable that that could happen. So I like that. I like that BYND strangle. So 125 minus 16, 109, right? So we've got 109 to 191 if we sell this strangle. And once again, the puts are obviously more expensive than the calls. You might just want to do something like selling some puts. You could go all the way down to like the 75 strike here and sell some 75 puts. It's a good chance that, you know, the delta on this put is 3 delta. So there's a 97% chance that this put is not going to come into play. And you could sell it for $100 and hang out for 49 days. That would take $750 in buying power, right? So if you've got 10 grand, you could sell a few puts and hang out. So if you sell 13 puts, you can collect $1,300 in the next 2 months, and hang out, see what happens. To be a little safer, you could sell put spreads. You could like maybe say, I'm going to sell the 90 put and buy the 75. This way, I know what I can lose. And what can I lose? I can lose $1,000 each time I put this trade on. So maybe you just put the trade on once. You say, I'm going to bet 1,000 to make 155 in the next month here. I like the delta on the 90 put is 8. So chances are this thing's not going through 90 in the next 49 days. Nobody knows for sure. Does that seem like a good bet? Well, look on the chart here. It does, unless it gaps back down to here. Seems like a good deal to sell puts in here. Talking about selling puts, let's look at Tesla for a second. And here we go back to Tesla. Tesla, kind of, we come back to this again and again, but you know, it was in a range for a while. It fell out of the range, and now it seems to have stabilized again in that area. So there you have it. Couple ideas, and please give me your own ideas. The other one people have been looking at is Roku. Whack. Roku got whacked. And it's continued to kind of falter here. My idea last week was to sell some out of the money calls. That obviously would have worked because this has gone lower. I did want to look at Twilio. One of my buddies was talking about, unfortunately, losing a bunch of money in Twilio. So let's pull up the chart real quick here. TWLO. You know, a lot of people, and my buddy included, you get long, you selectively pick some stocks to get long in a rising market, and you come out looking like a genius until the market cracks, and then boom, look at that. Okay, so it's down from 151 to 108. Painful. And what's the volatility in Twilio? 49, 42. And we can go back to what I've talked about before, which is to go to barcharts.com, check out barcharts.com, pull up options, and then highest implied volatility to see what's going on out there. ACB, Roku, Neo. I don't like to trade these ones that are small price stocks because it just doesn't have enough juice. But Roku's got some juice going. It's showing a bunch of Roku options on there. Netflix puts. Let's look at Netflix. $40 vol in the front month, 58 vol, 64 vol, 58 vol farther out. The stock don't look so great. We've seen a bunch of these that don't look so great lately, right? But this does create opportunity for option sellers, and this is starting to get richer as well. If we look out to Nove, what if we went like $50 out of the money here? So like if we sold the 310 call and then the 210 put. All right, so there's a strangle, 49 days. Put the strangle on once. It's $2,500 in buying power to collect $700 in a month. Maybe you selectively go through a few of these, find a couple you like, sell a couple strangles. You can tell from maybe listening to me that I am a premium seller in most cases, and that would be in line with a lot of people that you would watch as far as like options education online, such as Tasty Trade. Those Tasty Trade guys are advocates of selling premium as well. I don't like to sell cheap premium, but I like to sell. The thing is like when options get really pumped up, a lot of times that's because something big is about to happen. Sometimes when you've got a stock that may not be as high a premium, but nothing's going on, you can sell stuff and nothing goes on, nothing continues to go on, and you make your money, and it's like very business-like, and it makes sense. And maybe you're not chasing the highest option volatility on the board, but this is just a stock that is slowly rallying and has a sort of a normal options activity. Check out. Have you guys checked out Dragonfly? Let me get this Dragonfly. And I'm not going to have the right one here. Let me go to StockTwits and find him. It's this guy, Harmon. And he's really cool. And he has all kinds of options ideas. And a lot of times they are situations where it's not a super high volatility thing, but he's got good ideas on it. So check out this guy, Greg Harmon. I've talked with him about coming on the show before. It hasn't quite happened yet. Hopefully it'll happen at some point coming up. He does have a private stuff, but he also posts these trade options ideas that are public all the time. And here is an example, for example. And he'll say, like, here are 4 possible options ideas concerning this one stock, right? And you can look at them, and it gives you ideas. Really cool. I like to check out his stuff from time to time. Smart guy, good ideas. Check him out. All right, I'm going to leave you there again with my Moreing shirt. And yeah, I will be starting, I believe next week, a schedule where you're going to know when I am on Twitch and not. My work schedule, my other job's work schedule has been kind of sketched and all over the place, but I think after next week things are going to settle down a bit and we can get a real schedule for Twitch, and that way you guys can know when to see me and join me, and we can talk together and talk about your stuff, because what you making money is what this is all about. All the stuff I put on is like sample stuff to help inspire you to make money, and I hope you're successful with that moving forward. Awesome. Thanks for watching, and we will see you next time.